Hi guys, welcome back to this Money Control live stream. You're watching closing bell, I beg your pardon, with me Nandita, Khemka and my colleague.
Hello there, I'm Yatin Motas.
Yatin, closing bell of course, not opening, Thursday.
Maybe the series which expired today had some work for you, especially during
it has been a good series, yes. Yes. Also the fact that we are working for 5 days at a stretch after 2 consecutive weeks, perhaps that is also taking a toll. But nevertheless, a good series, although can't say the same about the day. It was a range-bound kind of a session. 7-day rally has halted today. So nothing really to complain about, so to say. It was an 80-point cut on the index. Sensex as well gave up that 80,000 mark. But for the April series, we have seen the Nifty gaining almost 3%. The Bank Nifty, which did hit a record high in this series. In fact, yesterday as well hit that 56,000 mark, has gained 7% for the April series. So yes, the recovery post-tariff sell-off has kind of reversed and good going when it comes to the market. Today, of course, a breather after a 7-day run. Mid-cap index also, snapped out of its gaining streak. Nevertheless, it still managed to outperform the benchmarks. Bank Nifty in today's session ended lower by about 0.3%. The advanced decline ratio was tilted slightly in favor of gainers, but almost even Stevens, 1:1. On the NSE. If you talk about sectors, most of them were trading with cuts. Only Pharma and metals were some of the pockets that did well. Pharma was very strong today. A lot of names like Dr. Reddy, Cipla were among the gainers, and so was Divi's Lab. That stock gained quite handsomely today. What didn't do well, FMCG on the back of numbers from HUL, margin worries, stoked kind of a sell-off on the stock. The stock was down almost 4% or so. And in terms of other winners, Indusind Bank was one stock that, resumed its up move. I think yesterday itself it had started, gaining. But today, once again, it is the top Nifty gainer. Ultratech, Cement, Grasim, these are some of the other performers. And Dr. Reddy's and Cipla, as I mentioned, featuring among the top gainers. On the losing end, side of HUL, you had stocks like Airtel, Eicher, Motas, ICICI Bank, as well as Eternal. But Yatin, broad end of the markets quiet today, but there were quite a few movers nonetheless.
Yes, it was a expiry day, and clearly the focus was mostly on the benchmark indices. However, if you look at the mid-cap end of the market, it was almost flat. So no big movement in the mid and small cap index. In fact, the advanced decline ratio was almost 1:1, clearly explaining the kind of market breadth or the silence in activity for the trading day. Obviously, the markets are also taking cue from the strong worded speech from PM Modi that the perpetrators of the terror attacks will not be spared, neither the people backing them will be spared. So I think the markets are now expecting some military action on the terror attacks which have happened in Pahalgam, Kashmir, and probably a lot of market participants, especially the retail and the HNI investors, turning cautious on the markets because people still don't know the scale of action that can come from the government with respect to this attack. Nevertheless, Newgen Software, that stock was up 11%. The new initiating coverage by one of the brokerages led to this kind of a move. Sonata Software, Natco Pharma, Whirlpool were the other stocks which gained nearly 5 to 10%. What was not doing well is Syngene, 13% down, top F&O loser, and we'll talk about this stock in detail as to the guidance cut which has led to this kind of a decline in the stock. Wari Energies, after a 19% intraday move yesterday, stock was down 6% in trade today. Nava, Canfin, Om, Vijaya Diagnostics were the other stocks which clearly were slightly under pressure. But Nandita, stocks like Divi's Lab, that was up 5% after the report by Citi. Good moves there. Stock hit a fresh 52-week high. Ultratech Cement, although the numbers was up 2%. SBI Cards, JK Cement were the other stocks which were gaining on the trade today, and clearly stocks at 52-week high.
Sure, as I mentioned, Pharma, of course, was the sector that managed to do well in a subdued market. But what was driving the market or weighing in on sentiment was the consumption basket, Yatin, because numbers came out from quite a few companies. Tata Consumer reported yesterday post-market. HUL came in today, and you also had Nestle India. But let's start with HUL because this is the stock that saw the biggest drop, so to say, among all these names that I mentioned. HUL down on the back of margin worries. The company has slashed its guidance, EBITDA margin guidance to 22 to 23%, from 23 to 24% earlier. Now, the company has also said that the gross margins are going to moderate as they continue to deliver right price value proposition. Now, this means that the company is focusing on giving customers good value for money, not overpricing products, and focusing, in fact, keeping prices fair, so to say, while still offering quality. So basically, they are going to forego margins in a bid to boost volumes. That's the kind of strategy, and which is why near-term margins may come under pressure, which is why I think the market took it in a negative way, and we saw the stock reaction. The EBITDA margin for the quarter, though, stood at 22.8% vis-a-vis 23% on a YY basis. Volume front, also the company did fairly well. I think the expectation was that the company will hand in a 0% or 1% kind of volume growth, but it came out with a 2% volume growth. So that was another bright spot. And the management has also pointed out that earnings growth is going to recover gradually through the year. They've also said that the first half of FY26 will be better than the second half of FY25. So some of the bright spots were also there, but the market kind of ignored that, and the margin worries dragged the stock lower. Now, if the commodity prices remain where they are, because input costs have been a pain point for all the other companies like Nestle as well. So if the commodity prices remain where they are, price growth is expected to be in low single digit, and the company, of course, will continue to focus on driving volume-led competitive growth going forward. Profit-wise, almost a 4% uptake standalone. Standalone revenue also grew 2%. If you look at the segmental breakup, personal care posted a 5% rise in profit, but the sales were in low single digits amid pricing pressure in personal care. Look at home care as well, rose 2%, helped by outperformance in premium fabric wash and fabric conditions, but home care has seen negative price growth. That was also something that was pointed out. The coffee business continued to see double-digit growth, and the company retained value and volume leadership when it comes to the tea business. Talk about Tata Consumer as well. The fourth quarter earnings did feel the pinch of soaring tea and coffee inflation, and margins dropped because of that, but still managed to beat the muted expectations that the street had. Going forward, the management has said that if the tea crop is normal and if prices start to ease off, they could see margins starting to normalize, but they can't say that with certainty, because we can't really predict where commodity prices will head. On the other hand, Nestle reported a 2% volume growth, which is signaling demand recovery even as profit dropped somewhere around 5% or thereabouts. Recently, we had a report by UBS also, Yatin, where they pointed out that there could be a sharp recovery for FMCG names when it comes to earnings in FY26. Of course, quite a few factors like the tax boost and 8th pay commission, all these things will play out, but that's perhaps later on in the fiscal. But for now, caution is the word when it comes to some of these FMCG names, Yatin, especially for HUL in the wake of the margin guidance cut.
Yes, and I think Nestle and HUL both reported a 30 basis point decline in margins for the quarter. Tata Consumer, 2.5% year-on-year decline in margins. So the margins for FMCG companies have been subdued for the fourth quarter. However, HUL in the press conference said that they are trimming the margin guidance not because they are expecting cost pressures to be quite big, but they would continue to invest and ensure that the volume growth happens. In fact, they're expecting a better H1 compared to H2 of the current or the FY25, the past financial year. So yes, growth-wise, things are looking slightly better, and with a better monsoon forecast, probably FMCG companies would probably be in focus. But Nandita, like HUL, the guidance for Syngene also was not that great, disappointed the markets, and probably the reason why the stock of Syngene was down as much as 15% intraday. Why the fall? Because they are expecting the FY26 revenues to be in mid-single digits. So, very mediocre growth predicted by Syngene's management. What does this really do? Analysts were sitting on a very healthy growth estimates for FY26, and with a single-digit, value growth in revenues, there is a big chance that this would translate into a 20 to 25% cut in EBITDA estimates. So, The kind of commentary that Syngene has given clearly shocked the street. In fact, for Syngene, the analysts are expecting that the margins will be under pressure, and not only that, a lot of destocking of their inventories would lead to further deterioration in the margin profile. So clearly, on the back of weaker, guidance, weaker expectations on EBITDA, we saw the stock crash in trade. In fact, not only Syngene but its parent company Biocon was also under pressure. So both of these stocks clearly, have been under pressure, and with the kind of growth which has been slightly below par, there could be some further downside according to analysts I spoke to.
Sure, 13% crash on shares of Syngene. Once again, it was the guidance that has disappointed the street. But, talk about some mid-cap IT names as well. Persistent reported numbers early in the morning today, and a good set of numbers, although the stock didn't really hold on to the gains, perhaps some bit of profit taking coming in after 2 good days for IT names this week. In fact, last 5 sessions or so, the stock of Persistent has gained in excess of 10%. But today, of course, let's take stock of the numbers. Fairly better if you compare it with the peers like LTI Mindtree. Profit-wise, there was a 6% growth. Revenue also grew 6% on a quarter-on-quarter basis. EBIT margin came in at 15.6% vis-a-vis 14.8% in the quarter gone by. Dollar revenues are up in excess of 4%. And look at the constant currency revenue growth. It came at 4.5%. It has, in fact, outdone all of the other IT majors and, its peer LTI Mindtree as well. Expectations were of somewhere around 3.7 to 3.8%, but it has even bettered that, 4.5%. Look at LTI Mindtree, that saw a 0.6% drop in its constant currency revenue. So yes, it has managed to beat its peers when it comes to the revenue performance. But if you look at the dollar revenue growth for FY25, it stood at 19% almost. That also looks pretty healthy. In terms of total contract value, the TCV, it moderated slightly compared to last quarter, $517 million. That was the kind of deal wins I saw during the quarter. The net new TCV stood at somewhere around $329 million, and that was largely driven by AI-led deals. Now, if you look at the management, the commentary was fairly upbeat. They've reiterated the goal of achieving $2 billion in annual revenues in FY27. In fact, they've also said that they are seeing sustained progress towards achieving this milestone. The company, of course, also declared a final dividend of 15 rupees, but the street did cheer that initially, but later on the stock came under some bit of pressure. But even for LTI Mindtree, the commentary, if you look at it, it's fairly upbeat. The company has said that it's confident that the first quarter FY26 will be a growth quarter, and they are hopeful of some deal closures as well in FY26. In fact, I was reading the report by Nomura on LTI Mindtree. Although they have a neutral call with a target price of 4,300 rupees per share, they've said that FY26 is likely to be a repair year for LTI Mindtree. And, margin recovery, although is expected to be slow, the improvement is hinging on a sharp growth revival going forward. Of course, when it comes to EPS, they have cut their FY26, FY27 EPS on estimate on the stock by 2% or so. But all in all, if you look at the performance of, LTI Mindtree Persistent has outdone. And, let's see how things really pan out, because these stocks have also seen a fair bit of rally, Yatin.
Yes, and the IT stocks clearly have already recovered, in the start of the week and last week. On the back of inline, results from IT majors, and obviously HCL Tech also fueled the rally in the IT sector yesterday. But in terms of Persistent, LTI Mindtree, overall, day of profit taking, in fact, Persistent was up 3% in trade and ended almost at the day's low. So yes, IT stocks now I think would broadly remain in a range, Nandita, and for LTI Mindtree and Persistent, the broker reports you read clearly indicate that the valuations are on the expensive side. So it's not that these stocks are coming cheap after the correction. They're still, higher in terms of historic valuations, and especially if you compare it to the large cap IT pack. Growth is there, no doubt about it. But on the valuation front, yes, things are looking slightly on the higher side given the uncertain environment.
That's true, and most experts want to take a wait and watch approach where IT is concerned. But that was all the stocks that we had to cover this afternoon. With that, we've come to the end of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. and come back and join us tomorrow morning, Friday morning, 9 a.m. with opening bell. Thank you.